Welcome to Season 2 of FinTech's A podcast by the one and only policy shop for Canada's fintech scene. I'm Alex, and I'll be your host. Join me as I talk to the people who are making a big difference in the lives of Canadians. Today, our guest is Tyler Thielmann. He's the president and CEO of Spring Financial, a fintech company in lending. We talk about Bloom, their new AI financial assistant. We also talk about the federal government's crackdown on predatory lending. Tyler, thank you for joining us today.
Yeah, thanks for having me on, Alex.
First question, what's Bloom?
Bloom is Canada's first AI-based financial concierge. So it's going to help any Canadian download all of their transactions from all of their financial providers into a single feed. It's going to automatically categorize expenses with some of the best categorization technology in Canada. And it's going to provide AI-based feedback to any of your financial questions.
When you say financial services concierge, can you unpack that a bit? Is it like a AI assistant for your financial life?
Essentially, yeah. It's going to help you out. So if you think about visiting a concierge in a hotel, you're thinking about like asking questions related to your experience and what's going on. This is no different. It would be, just asking questions based on your financial life, your spending habits, your income, and really just getting basic assistance that you wouldn't usually have access to.
A lot of the companies I talk to have for a long time been saying, how do we deploy AI into what we do more and more to get more productive, to enhance the customer experience? Can you give us a bit of a peek behind the curtain? What does that conversation look like at Spring?
Yeah, so I mean, I would break it down to two verticals, high level. Like, what's a product we can offer our consumer base? Spring is a direct to consumer business. We had last year over almost 1 million applicants apply with us. And then the other vertical is, what are we doing internally with our staff and employees and labor and technology? How can we use AI to make us as a company more efficient or better or something like that? And so I would say that, there's conversations going on at both ends. And I think for us, we felt more compelled on the consumer side today than we did on like the internal operations side. We haven't been that impressed yet with AI-based chat as an example of something that, everyone kind of goes to first is like, well, is there a chat model we can deploy that requires less human labor or is more accurate or something like that? And I don't think there's been, enough success there yet and enough things to make us really feel compelled to do that. And I think a lot of people in the industry are having this like wait and see approach where every 6 months things get so much better that nobody wants to like do something now. So I think that's on like the company side. On the direct to consumer side, I mean, obviously we did what we did. We launched this AI based financial concierge that's helping consumers because I think there isn't a lot out there for the everyday consumer. I think people are curious about LLMs and things like ChatGPT and wanting to see how this could impact their own life. And I think this is just really just scratching the surface. I think there's so much more we can do with it. And so, yeah, I think we felt more compelled on the consumer side.
I use LLMs a lot in what I do, probably too much. And they can be annoying. Well, they can be very helpful at times, but they can also be very annoying for all the reasons we know. They hallucinate. They don't give us the right answers. All of this is often exacerbated when they don't have the relevant context. Context is often that which is scarce. I mean, some of the later models that are better at reasoning perhaps are a bit better there, but they're still not perfect. How does Bloom work for consumers who maybe aren't as neurotic as I am when I'm assessing the validity of what my LLM is spitting out at me?
Yeah. Look, that's a great question. And I think by no means have we solved this problem in entirety for consumers. So our AI model isn't immune to making mistakes. And we disclose that to the consumer. And I think most consumers now know also, like, these things aren't perfect. They're getting better. As they get more context, they continue to get better. So, but I think what we've done versus, let's say, just a Chat GPT example where it's an open window, ask me anything. This is really confined to your finances, the information on hand, and so it's a much more narrowed scope. And when you have a much more narrowed scope, you can eliminate a lot of the possible hallucinations and different inaccuracies that you can get when versus just a super broad like conversation window that is literally ask me anything.
There are some people online that aren't hard to encounter who are just very pessimistic about, I was going to say technology, but I want to go further and say innovation and change. Can you walk us through an example, perhaps one of the ones you opened with, about how Bloom actually does make a consumer's life better? What is it allowing the consumer to do that they can't do today, or what is it allowing them to do more effectively or efficiently? Hold our hand and walk us through it.
Yeah, sure. So I get so fired up about this because I think the consumer banking industry in Canada today is just, I mean, it's ripe for disruption. It's extremely hard if you know the Canadian landscape, which you do. But I mean, something as simple as seeing all of your transactions in a single feed. That's one of my most favorite features. Like, if you have all of your, I bank with Royal Bank. If you have even inside of Royal Bank, you would need to go and check your checking account, and then separately, you would go and check your Visa account that you have with RBC. This is just is chronologically ordering every single transaction. So I can just scroll through and see a single feed. And I'm a simple use case. There's lots of people that have, like a checking account with Scotiabank or a mortgage with TD and a Capital One credit card or an Amex card. And the ability to like stitch all of that into a single feed where you can see all of your transactions, I think that's a huge win. It's so simple, but it's a huge win. And secondly, layered on top of that is our AI-based categorization engine, which is just going to take all of the transactions from all of the different places and categorize them for you. And so you don't need to do anything. It's just going to automatically show like, hey, this is how much you spent on restaurants. And that could be a combination of transactions from your Amex, from your checking account, from your, across institutions. This is a dead simple feature, and I think it's still just hugely beneficial to the average person to easily just have a quick glance and look at your finances, and it's automatic.
Perhaps I'm revealing too much about the administrative challenges that I encounter every day. But when are we going to get to the point where one of these things can access my email, access all my bank accounts, and then do things like basically produce my expense reports and help me file them, tell me what bills are due when, and automate the process behind the scenes to actually pay them in a way that optimizes my cash flow? Like, when are we going to get there? How far are we away?
I hope it's sooner than we maybe think it is. So, I mean, some of the things you mentioned we're doing, as an example, inside of Bloom today, you can see all of your upcoming recurring payments. So whether that's a mortgage or your TELUS bill or, your internet, your gas bill, all of that is automatically, again, using our AI-based systems. It will identify recurring transactions and tell you when they're coming in the future without you having to do anything. So that's pretty cool, but it's definitely not going to pay that bill for you. And that would be, obviously a really super cool feature. I think there's so many in Canada. I don't think we're going to be the first to get there. I mean, we have so many infrastructure limitations on payments and moving money and where you can hold money. And so I think, unfortunately, we don't have the rails set up to make this, to really unleash a lot of that technology. I'm hopeful that, if we have a government and, it's not just one government. I mean, it's going to have to be, 10 years of government that is really committed to making this better. And I think if we can do that, then maybe we get somewhere.
When I consider one of the primary inputs to LLMs, it's data among a bunch of other things. When I think about one of the things modern payment rails are supposed to do, other than being more accessible by non-banks, by non-bank financial technology companies, these modern rails are also supposed to allow for more data to follow the payment. When we think about accelerating the use of AI in financial services, perhaps payments specifically, what's the issue? Is it that or what's the bigger issue, I should say? Is it that fintech companies can't access the system and build anything on top of it in the first place? Or is it that our payments today are dumb? There's no data following them. So it's hard to tell what's what.
I mean, they're both problems. But I think that I would say it's in my opinion more the first one, where fintechs are just completely unsupported in Canada, or very little support. So there's the big five banks that don't provide a ton of support to fintechs. There's the government, which to date hasn't provided a ton of support. There's a lack of data access, lack of access to payments. I mean, I think, one of the funniest things I see is if a potential competitor comes into Canada, let's say a company from the US or the UK, it's almost like you almost know they're going to leave for sure, because it's just so they come here and they're, well, you can't even take payments, you can't even send money, you can't even, even getting access to credit bureaus is pretty difficult. So I think there's a lot of friction. And I would be happy if any one of these friction points was removed in any particular order.
It's always really frustrating to hear. I'm even aware of fairly large Canadian financial technology companies who offer financial services to their customers in the United States that they don't offer here because of how, for lack of a better word, shitty our infrastructure is and how closed off and controlled it is. And it's just wild to me that you can have a Canadian company doing more for American customers than they are for Canadian ones. Um, Other than Spring and Bloom, of course, who in the financial sector is deploying AI or using it in the best way?
That's a good question. Look, I don't know if I know there's a ton of examples. I think there's some interesting stuff going on with robo advisors, in the wealth management space. Um, but again, it's that space is deeply regulated, and I think it's going to be really hard to have an approved robo advisor in that space. So I think other approaches that I've seen fintechs take is, again, trying to solve the data access issue by creating their own bank account. So like you have a checking account with this fintech, which is really, a white labeled account with People's Group or one of the banks. And so they actually have open banking data and they have perfect access, and then they kind of layer something on top of it. I think the challenge there is most people are still just using big five bank accounts or the top credit card companies, and it's really hard to penetrate into that market. So you have to have access to, what I would think of as the user native data. Where are they banking today? Instead of trying to convince them to bank somewhere else, it's really getting access to the data that they have. And I don't think there's a lot of AI good AI examples for a direct to consumer basis in Canada today.
You said a bit about Bloom. You mentioned robo advisors. Do you think there's a part of the government? Do you think there's a fear or anxiety among policymakers that if we let these models, these LLMs, have too much freedom, give too much advice to Canadians, Canadians would be led astray. Therefore, we need to very closely regulate and monitor what's happening here. Is that kind of the motivation when you talk about things like regulation, or is it something else?
I mean, I think that we have a culture around regulation and bureaucracy that's really hard to unwind. And so I think when you think about it from an individual who is working at a regulatory body, they have a job and their job is to regulate. And so I don't necessarily think that they're thinking about this on a big picture. It's like they're just doing their job, which is to regulate the market that they've been assigned to do. And I think from, a large perspective, yeah, we've built these structures on in the name of providing safety or fairness or different things that on the surface I think sounds correct and right. But I think that most of these regulators have gone far beyond that, and in the end, we pay the price of really stifled innovation and lack of competition, which I think ultimately is unfair and isn't helping Canadians and is putting us far behind.
Today, in the here and now, given current technological constraints, current capabilities, am I getting better financial advice from ChatGPT or Wall Street bets on Reddit?
That's a great question. I'm not sure. I think, I think there's interesting information everywhere, and I would, if it was me, I would check both sources. I think that Look, I think that the crazy part is even that we're asking that question because we're not saying we're getting better info from the financial service providers that are out there, right? And it's the same in the health industry too, right? Every time now I've gone to the doctor over the last little while, I've immediately gone home and just asked ChatGPT a bunch of questions, right? Which I feel like I couldn't ask or wasn't getting the answer or wasn't, was getting the whatever the prescribed doctor answer is, right? And so I think when you see stuff like that, and the finance space is no different, if people don't think they're getting the right answer from the people they're supposed to get it from, they're going to go to Reddit and ChatGPT and they're going to try and find something. And so the hope is in the long run that, we are able to provide good and accurate and helpful information directly to our consumers.
One thing that sticks out to me about what you said is the the way this part of the world is moving would seem to favor, perhaps a particular cognitive profile, right? Like someone who maybe is um, uh, uh, naturally skeptical of everything they hear, not willing to take it at face value. Um, uh, Someone who is maybe curious for other perspectives. What cognitive traits would you say the direction the world is going in will present the highest returns to?
That's a great question. I think, and honestly, when you're asking it, I'm thinking about how overwhelming I find it sometimes to actually just for myself personally to get the right information, right? Whether that's again back to the doctor example or the finance example or things you're hearing at schools and universities and you have this overwhelming feeling of I don't know what's true and I don't know what to believe. And I can't possibly go and look at all of these different things and like find the truth in all of these areas. And I think that's really troubling. But I think that, your question, what is the right cognitive approach or who's going to win in that thread? I mean, it has to be ultimately people that are willing to ask questions, I think, and at least be open-minded to the fact that there might be another answer and the canned response you're getting from the professional you're speaking with might not be the best answer, right? And so, I think in the finance space, a question I've been asking people a lot recently is, if they have a financial advisor or not, and if they do, why? Like, what is it that they're getting from that person? And because this is a very entrenched, kind of what I would think is an old money industry, but still, so many people have like a traditional financial advisor, and um, I think I still think we're not asking why nearly enough or challenging the status quo.
So your long curiosity and open mindedness. Way to
Yeah,
flatter my prejudices, Tyler. Um, okay. Last question on AI generally before we move on to some other things I want to ask you. DeepSeek is making a splash. I wasn't initially going to ask you anything about this, but like all the newsletters I subscribe to, like I feel like every like other thing is about DeepSeek. Uh, uh, should we be worried more or less about where AI innovation is happening versus what or how AI innovation is happening?
I mean, I think to some level we probably should be a little bit worried about it. And I think because there's so many open questions or unanswered things about where is this going and who has what technology. And, you know, I'm no, I'm not a history expert, but, I think when we made all the nuclear advancements that we did, you know, all countries were concerned about what other countries were up to, right? And I think this is, somewhat of a similar playing field is we should be somewhat concerned about what other countries are up to. It's not nuclear, but it's it's extremely advanced technology and it's going somewhere very fast. And there are, you can believe a story about like, this could go somewhere very badly for humans. And so I think from a perspective of national defense and security, I do think it's essential to know and people should be cautious about it.
Regardless of what your baseline assessment was of the AI doomers online, should DeepSeek cause us to revise uh, uh, the status of AI doomers up or down?
I mean, I think there's validity to, you know, an AI doomer statement and and I think it should be I think it should be considered. I don't think this is completely benign technology that's not going anywhere. But I don't know enough to, it's hard to know.
Bloom better not be plotting to take over the world.
We're just gonna help you with your finances and make better decisions. That's where we're gonna stop.
Okay. The maximum allowable rate of interest. This is something that took up way more mind space than I wanted it to last year. Um, our government had been very active on this front. What is predatory lending? Because that's how the government framed it. It's like they're cracking down on predatory lending. What is that?
So, I mean, I'll tell you what I think the government thinks it is, and that is just lending above a certain interest rate they would consider predatory. And so it's a blanket definition of, they moved the interest rate maximum from 46% to 35. And so using the terminology that they use, they would consider predatory lending any loans at 46% or between 35 and 46%.
Do you think that is a sufficient definition? Do you think that's the true definition? I have my own biases, which I'm happy to share, but I'd like to hear from you first.
I think it's a completely unfair definition. I am more of a free market person, and so I think that when it comes to lending and lending pricing, it's really more of a science than anything. It's just risk. It's risk based pricing, and so a lot of people don't maybe fully conceptualize how this works, but it's pretty simple. You have to create a group, and inside that group of people, you're going to have similar characteristics like income or debt or repayment history or even geography where they live, and and then you assign a probability of defaults to that group, and then once you've done that, then you can assign a price that's going to help you know how much you have to charge to lend to people in that group. And I mean, I'll say it because it's relevant and news right now is the fires in LA. Insurance works exactly the same. It's risk-based pricing. And you would, have a group of homes and then you would assign a probability of a house burning down. And then you would have to price your insurance based on that probability. And I think people don't sometimes really just understand if you force people, if you live on a street that has 10 homes and they're all exactly the same value, let's just say they're all worth $1 million, and there's a 10% chance of a house burning down in any given year. There's 10 homes on the street, there's a 10% chance one home is going to burn down every single year. And they're all worth $1 million. It's really easy to conceptualize. Well, what must the insurance cost? It must cost $100,000 per home, at least 100,000. There's going to be an insurance provider that's paying people and making some profit. And so, if you have a regulator that comes into that market and says you can only charge a maximum of $50,000 for insurance, what's going to happen? Either somebody's going to try and provide insurance for 50,000, and when a house burns down, they're not going to have enough money to replace the house, so you get half a house back, or they're going to leave that market because they cannot price it accordingly to the risk. And so predatory is the wrong language to use when it comes to lending. It's just it's a pricing science. It's just risk-based pricing, and that's how it works. And I can understand, and we could talk about why, that might feel unfair, why people don't like that. But at the end of the day, like, pricing is really just a science on this product.
I've always thought that whether it's 36 APR or 34 APR, it doesn't tell us anything about whether it's predatory or unfair. When I think about predatory or what constitutes predatory behavior, it's really the behavior. It's not the price per se. It's is the lender lying to the borrower? Is the lender obfuscating terms and conditions in the agreement? Is it it is the loan set up in such a way where there is no intention for the customer or the borrower to pay it back so they can be hit with all kinds of penalties after the fact and aggressive co- collections. That bundle of behaviors, I think, better represents what the government is calling predatory than the price itself. We tried to make this point, but I didn't think it was well received, in part because um, I have to be honest with you. I'm not entirely sure the government's objective here was to make good policy. I worry it was to make good political theater.
I agree. I mean, it's funny, this, like, cracking down on is a commonly used phrase. Like, in British Columbia, where I live, they said, "We're cracking down on Airbnb owners because that's going to dramatically lower the price of houses." And it's like, I don't I would take the opposite view. I don't think, and I'm not an Airbnb owner. I don't have any of that, but I just don't think that, like, on the margins, some Airbnbs existing and it making them not exist is gonna suddenly change the price of homes for everybody. I don't think that's good policy, but, it's a similarity. It's just it makes headlines. It sounds interesting, and unfortunately, I think a lot of policy today is driven just based on the soundbite.
From where you're sitting, what are the pros and cons of the government's approach to cap the maximum allowable rate of interest using the criminal code, rather than trying to establish some kind of market conduct framework for lenders, the kind of framework that would target the specific behaviors that I mentioned earlier?
Yeah, I think this is a great question and something that would have been worth the government's time to think about instead of what the right interest rate is. Um, and so maybe most people don't know, but the criminal code today governs the maximum rate of interest, meaning that if you violate that, you could be charged criminally by the crown and ultimately end up in jail. And that's different from many of the other market-based regulations that you would have, where you would have like a fine or some sort of regulatory process that ultimately ends up in a penalty. And it is this way because I think when this law was created, it was to prevent the people in the back alley behind the casino from like breaking your kneecaps. And so and sure, like, fair enough, that person should be considered a criminal. But what we have today is all of these non-bank lenders are governed by this law, and there's practically zero enforcement of it. So there's not, like, the RCMP aren't coming here to do the math on APRs and ensure that the consumer's getting the correct APR. That's never happening. And so I think what would have been much better, and along the lines of what you're saying on how you define predatory lending, it would have been better to have a overarching body, maybe a federal body that was possibly looking at all the non-bank lenders and thinking about a way of how can we encourage this market, encourage competition, encourage consumer choice, and also find a way to provide some guardrails at the same time. Instead of just saying, we're going to go from 46 to 35. That's the new rule.
You mentioned enforcement. Is enforcement expected to ramp up with this change, or do you suspect it's going to be the same as it was before? Nobody really checking and looking unless there's some national headline.
Yeah, I think that, I wouldn't expect anything to change, and in fact, the people that we spoke with from the government also agreed to the fact that this was an issue and that there wasn't any proposed improvements to this issue, and so I think what you end up with is a company like Spring Financial that is, uh, going to comply and is complying, to all of the laws, but then you end up with some companies in the shadows that are not complying, and it seemingly doesn't seem like there's any enforcement action, and that in my mind is it feels incredibly unfair. Um, and and so all the companies that are complying are at a significant disadvantage to the ones that don't, and the ones that don't are just able to get on with it.
How do you expect this change, even with weak enforcement, is going to affect the composition of lenders in Canada?
Well, it's already pretty non-competitive. There's not a lot of scaled non-bank lenders in Canada. And I think it's going to become even harder to become a legitimate player in this market. So over time, there's going to be less consumer choice, and I don't think that's positive for the Canadians. So yes, Canadians, on the surface, it'll look like prices have come down. However, there will be less access and less consumer choice. So I heard it said really well. Like you could pick any number. You could say the maximum interest rate should be 100%, should be 80, 50, 20, 9. You can pick any number on the scale and we could debate what the right number is, but everyone has to agree that there's a trade-off, right? If you're picking 9, you're picking low prices and low access, meaning almost nobody can access credit. If you're picking 100, you're saying there's going to be extreme access and prices can be really high. And so I would be tending towards access and prices, and let the market provide the consumer with the best price. If you let people charge that amount, there's going to be competition and margins of the companies will naturally come down. And so I would be more on the free market side of how this should work.
With this lower maximum allowable rate, is it going to be easier or harder for the average consumer lender to manage the risk of adverse selection? Or is it going to be no real change there?
So adverse selection meaning that you're getting as an online lender, you might be getting a bad set or a bad population of applicants. Is that kind of what you're asking? Yeah. So I think that with fewer participants, you probably are going to have less of an adverse selection problem, because there's not like, I think when there's a ton of participants and you're an incumbent or a new startup in the industry, you might get the people that have applied to the last 25 lenders and like they're coming to you and there's a reason why they didn't get a loan at the last 25 places. Um, I do think though that, the credit bureaus in Canada make it possible. It already help you avoid adverse selection because you can typically see inquiries. You can typically see like what a customer journey has been. And so I don't, my opinion, I don't think adverse selection was a huge problem. I think it's maybe a bigger problem in the insurance industry, actually.
Okay. The industry has been in this game, so to speak, with regulators. Y- you referenced it nicely when you said, it's the government's crackdown. Call it the crackdown game, where the crackdown is actually a moving target. Doing one thing is never enough. If I recall correctly, the government last year consulted on some changes, and then before they even implemented those changes, started consulting on new
That's
changes.
right.
There's always more to do, right? Until there isn't. So what in your mind is the Nash equilibrium of this game? What's that steady state that we're sort of trending toward?
Yeah, I mean, it's hard to say because I think if you keep forcing lower prices and less competition, I do think at some point you have a significant problem with your voter base, with the consumers who are now without access to credit. And so, but again, it's hard to know how long it takes for those things to happen. And especially right now, there's, like we're in a uncertain federal government period of time. And so, I guess I haven't really thought that much about, in the game theory, if we're both going to end up in a place where there's no, incremental improvement for either party. Um, with the period of time that's elapsing and the government changes and how long it takes to understand the impact on consumers and new policies that will come in, I don't know if we find an equilibrium.
Do you think things change under a conservative government? Is the Nash equilibrium different in that world?
I think that, again, I'm not a political insider. I don't have some knowledge. I think my gut or my instinct tells me that the conservative government, if they get elected, will not. They haven't spoken very much about this maximum interest rate issue, so I don't think they're going to make this an issue for them. I think that they're just going to be silent on it. That would be my guess. They probably aren't going to make it worse. I think over time we need to make competition a priority in Canada, and I think we are just one small industry that is becoming less and less competitive. And there's many industries that are needing competition, banking and mobility and all of these different things. And so, could I think this could be addressed on a broader scale if they think about a way of addressing competition in general. You would have to say, what are the controls that are in place in many industries, and how can we get rid of controls to foster competition, consumer choice, and benefit for Canadians in the long run? I don't know if they're going to get there.
Who do you think the current government has been trying to appease with these measures?
That's a good question. Well, I think it's no secret. There's a group called the Acorn Group that was, really calling on the current Liberal government to make these changes. And again, it's hard to understand why, because of everything I've said. It's risk-based pricing. It's access versus prices. And I think any rational person, once you explain this, would, in my mind, would pick, okay, well, like there should be access and it is risk-based pricing, and everyone understands the insurance example and your house burning down. And so I don't know why this is a thing. I think maybe people get really fired up about interest rates and cost of credit versus other things. Like you could buy a pair of jeans or AirPods or anything, and those margins on those products are way higher than consumer lending margins. Consumer lending margins are actually kind of tiny, and I think people get fired up about it because I think two reasons. One is the richest people or the wealthiest people have the lowest risk profile and therefore have the cheapest cost of credit, right? And on the other side of the spectrum, you have the poorest people. 52% and 50% of Canadians are living paycheck to paycheck, right? And they have the highest risk profile and as a result, the highest cost of credit. And that really aggravates people, that the fact that that's true. And I, say like, look, I can't change the fact that that's true, and I can't change how pricing has to work in this industry. If you live on a street that's very fire prone, like there's not a lot I can do to change the fact that you live on that street. It's, what are we doing to help educate people, to help people graduate into better products, to help them build their credit? Those are things we can do and we're excited about and we do. But I think ultimately, it's hard to explain why people get so fired up on these products.
It's easy to think of the government as a bit of a monolith, to just say, oh, the government doesn't understand. But the government consists of so many different moving pieces. To oversimplify things, still, you have policymakers in the departments who are doing the really nerdy research, the really nerdy consultations, getting into the weeds. so to speak. You have more political offices that are effectively engaged in a never-ending popularity contest. Based on everything you know about what the government's been doing here, has the government kind of been won, or like have there been different opinions depending on who you talk to in government?
This was maybe one of the most eye-opening things for me, and I haven't, been involved in too many processes like this. There was a couple meetings I had that were the most eye-opening. One was with a consultant. This was a meeting over Zoom or Teams or something. It was a consultant that was hired by the finance ministry to give the government some information about the possible reduction in interest rates. And this person understood the industry. And when I talked to him about the cost of acquiring a customer online and ad cost, he already knew. He said, I don't even know how you're in business today. I think this is an extremely hard business to be in. I don't think you have big margins. And so he knew the economics here. And I was actually kind of encouraged after that call. It's like, oh, okay, interesting. There's like some really smart people here that are actually doing, good work for the government and are going to provide them that information. And obviously everything, like nothing convinced them to change course. And so I, there are smart people, whether it doesn't seem like they were listened to. I think other ones were, actual employees that worked for the finance ministry, and I felt bad for them in some cases where it seemed like they also knew the logic here, and that this was going to squash competition, that there was an enforcement issue, but they have to toe the line, right? And they go back to, well, this is what the minister wants, and this is what we have to do. And so it does seem as though like there's some not a huge willingness to listen, even internally, on the people that they're getting to give them feedback or that work for them.
Yeah, it's like, courageous advice, but then we need loyal implementation.
Yes.
Do you think this paid off politically?
Um,
I mean,
I
if
no,
we look at the polls, right, like, obviously not.
I mean, I wouldn't be the one to say this issue impacted the polls. It's hard to isolate this and say, did this work or not? I think there's way too many other things going on, and I don't think this helped or hurt the Liberal Party. I think that it was just maybe a waste of time, and unfortunately, like a policy that just went through that I ultimately think is negative for Canadians, that didn't help or hurt the party.
Let's talk a bit more about the Canadians. Who so we the government has talked a lot about Canadians who need to rely on debt to make ends meet. But I've always felt like we've talked about them as if they're like this abstraction. I'd love to know in more detail who they are. Like, who are the Canadians um, who are taking out these loans? Like specifically, like are are they employed? Do they happen to be older, younger? Are they new Canadians? Were they born here? Like, what do we know about them?
Mhm. I mean, a lot of all of the above. It's like I said, over 50% of Canadians live paycheck to paycheck, and so we are one of the biggest users of open banking data in Canada. We have hundreds of thousands of Canadians each year that have to upload bank statements, and that's part of the loan adjudication process. And you can see in the bank statement, you get paid, and then these are people that have incomes that are getting paid biweekly or twice a month, and they have their bank balance rise, and then over the course of the next, 2 to 15 days, they kind of settle all their bills and buy groceries and pay their phone bill, and then, they wait for the next paycheck, and there's nothing wrong with that. That's the life of, like, over half of the people that live in this country, and that was my life at some point in my life too, and so I don't think it's like, who are these people? Like, how could they not manage the money? It's no, this is just like the average everyday person. They could be working, they could live in a city, they could live in rural areas. This is your average, hardworking Canadian. And I think a few things have happened here. Life is really expensive. Costs have, increased dramatically over the last 5 years. And and a lot of people, you miss a day of work, you have some sort of unforeseen expense, you need to replace the transmission in your car, your washing machine breaks, something happens, or like I said, you miss income. So it can be on either side of the ledger. You can like get paid slightly less one week, or you can have slightly more expenses one week. And sometimes, it's not like you can just go ask somebody for money. Like you just need money to make, to smoothen out this one-time expense. And millions of Canadians are accessing financial services just for this.
What have you learned about human decision making that contradicts conventional wisdom about how people make their credit decisions?
Well, I think that if you talk to somebody who's a prime customer and has been, prime their whole life, never borrowed a dollar, and I think it's that persona that has a really hard time understanding this industry, right? Like, um, and I think when they hear that, oh, somebody would access credit at 30%, and they think that, like, well, how irresponsible is that person? That's insane that they would ever do that. And I think I've really, changed, being in this industry, I've really changed my mind on that. Like, these are just normal people, and this is a normal product that exists in the industry and is for sale and that people can buy. And so there's nothing inherently wrong about it. It's just a tool that people can use. And so I think a lot of people just see this as a tool. They're gonna need to improve their credit. Something happened. They're in a bad spot. And one thing we talk a lot about at Spring is really just empathy for a consumer. It's just, hey, people are people. Things happen. People make good decisions. People make bad decisions. I've made bad decisions. And we're just here to be there at a time of need and try and help a consumer get the best possible product for them. And enable somebody to do that in a way that's as dignified as possible, meaning it's online, it's easy, it's accessible, and it's fast. And so, yeah, I think there's just normal people making normal decisions with a product that's available to them and is going to be helpful to them in this situation.
In some of my conversations with those in government, I really get this kind of sense that there's this paternalistic urge at play. It's like this, oh, the people who take out loans at such a high cost are irrational. They don't know any better. They need to be protected from themselves, essentially. Um, the nerd in me did when I first encountered this view, what I always do, which is like, surely someone has done experiments on this. I found some interesting economic research. I think it was out of the U.S. Basically, they came up with a research designed to test how rational such borrowers were, and they relied on a bit of a heuristic for this. Like, were borrowers able to accurately evaluate their probability of default? And they found that a lot of them could, and with repeat interactions with the lender, their guesses just got more and more accurate, which they kind of inferred meant they're rational because they can actually estimate the expected cost of the loan. And I haven't found anything like that in Canada. It wasn't my impression that the Department of Finance did any research like this. Um, uh, have you come across anything interesting, anything precise to kind of push back on this idea that these people are irrational and need protection from themselves?
I don't think I would point to, I don't have some hard data on the top of my head. But I think it just back to like basic principles here. Like we don't, I don't think people need to be told what to do. I think we need to do that less as a government or as regulators. I mean, we're not in the mall telling people they shouldn't shop at this store because their margins on sunglasses are like 300% and you have to pass a test in order to buy these sunglasses. Like that's insane. Everyone would think that's ridiculous, right? Um and so I think, again, I'm a believer in market forces. I really believe in, what you said, you know, about predatory lending. Like people, there should be consumer protection, awareness, education, right? I think, I talk about this all the time. I think that, people easily overlook credit cards. So many people have credit card debt, right? And they don't pay it down. They're completely uneducated about how that works, what even their minimum payment is. And, when you think about signing up for a credit card today, it's so easy. There have stalls set up in every university. As soon as you're 18, you get targeted to sign up for a credit card. How many of them tell you actually how that credit card is going to work and what you're required to do? And even as far as making payments, right? And so I think that, I tell this story all the time. The first time I got a credit card and I spent $100, I was expecting to log in and see a balance that said minus 100, right? Because I had spent 100 that I didn't have. And in my mind, if you do that on a checking account, it would say minus 100. And then but I saw a positive 100 and I was confused. I was like, well, nobody's shown me this. Nobody's given me any education here. And so I immediately put um $200 onto the card, and then it said minus 100. And then I thought, oh my gosh, I have no idea what's going on now. I've just lost $100. And so again, the education side is so important. And I think that, that's something we always try and do is, hey, if it does a customer, have we educated them? And do they understand? Which is really just a question of, have they heard what you said and could they recite it back to you? Like, in your opinion, does the customer understand the product we got? And that's a real statement we use internally when we're reviewing calls and transactions. Is, in our opinion, does the customer understand? And if they don't, we didn't do a good enough job.
Um, as you were going through all of this, the more facetious part of me was just thinking, from the government's perspective, none of that is probably predatory because if their definition of predatory hinges on a number, a price, some of those retail credit cards you're talking about, like they're what, in the high 20s, like that's under 35. Like, we don't have to worry about that. It's fine.
But it's the lack of understanding. People don't know
Yeah.
how this works, right? If you ask most people, likely what started to get them in trouble is most likely a credit card. It's not an installment loan. It's not a 46% loan or a 35% loan. It's probably not even a payday loan. We're not in payday. I assume most people's issues start with the credit card. Um, and those are supplied by the big banks, right? And they're not, like you said, they're not predatory.
So I'm struggling to make sense of something here. Like, what is it about this subset of loans that just gets people so worked up when there are other similarly high cost loans that seem to fly under the radar, attract no ire? Like what is it about this?
Well, first of all, I don't think there's a huge portion of people that are fired up about it. I think that there's consumer groups like I mentioned that are fired up about it. It became big enough to become a government talking point, and they took action on it. And then I think it's the other group that we talked about. That's like the persona of like, I've paid all my credit card debt. I cannot understand why these products need to exist, and we should help people from themselves. And I think there's just a huge gap in understanding the market and understanding why people, need this. And so I think, the combination of the consumer group, the persona of people that don't understand, that have never taken out a loan in their life and never lived paycheck to paycheck, and they're the ones telling the rest of the world, like, you should be more like me and not use a loan, right? It's like, oh,
Yeah.
that might not be reality.
This brings me back to the beginning. If only we were a bit more curious and open minded about those who may not be like us.
Yeah.
Last question before I let you go. We're talking about the polls. We're all looking at the same ones. A conservative government is likely. Suppose that happens, and suppose you become Pierre Poilievre's financial sector policy advisor. What would you tell him to do in his first year in office to make the financial sector work better for Canadians?
Look, I think we need more competition. I wouldn't even. I'm in this installment loan industry. I wouldn't even bring up like installment loans. I think just general culture of what can we do to create more competition, more consumer choice that's going to benefit Canadians in the long run. And so that's going to be things like, pushing open banking. Fintechs, people should have access to data. People should be able to give people access to data. Payments, ease of switching. There's so many things in the financial space that I think are just completely locked down, and it's under the guise of, oh, we have a secure financial system. But we could do so much better. And I think that, hopefully we can drive at these things that create competition, again, create consumer choice, and let the market run. Like, companies will come up, they'll make good products, and they should be allowed to do that. And companies are going to fail and some are going to succeed. We need a real market. We need real competition, and we don't have that.
Tower, thank you much for your time today.
Yeah, thanks, Alex.
And that's a wrap for this episode. Thanks for joining us. If you're looking for more, visit us at fintechscanada.ca or follow us on LinkedIn. See you next time.